Today, PayPal takes crypto payments mainstream by rolling out a new feature for businesses. A group of Democratic senators are probing the head of the country's housing finance agency over considering crypto in mortgages. And entrepreneur Joe Lubin discusses the latest on his crypto treasury company SharpLink and whether we could see blockchain firm Consensus hit U.S. public markets. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies are slightly in the red to kick off the week. Meanwhile, the S&P rose a bit as investors showed limited enthusiasm over a highly anticipated trade deal announced between the U.S. and the European Union. Now, as of noon Eastern, both Bitcoin and Ether dipped about 0.5%, with Bitcoin trading above $118,000 and Ether trading around $3,800. Solana's SOL token, however, climbed slightly to about $187. Anthony Pompliano, the CEO of Professional Capital Management, joined CNBC's Squawk Box this morning, where he weighed in on the increasing adoption of Bitcoin and Ether and where he thinks one cryptocurrency stands over the other.
I think that Bitcoin has kind of broken away. Doesn't mean that some of these other assets maybe in the future can't do that, but Bitcoin definitely continues to dominate the market, both in terms of actual dominance of market cap, but also I think just capital flows and time and attention.
Okay, let's talk about the top stories. PayPal is moving deeper into crypto, rolling out a service today that would allow U.S. merchants to accept more than 100 cryptocurrencies for payments. The goal? PayPal says it aims to offer cheaper and faster cross-border payments compared to traditional card payment methods. So the new feature, called Pay with Crypto, connects customers' crypto wallets like Coinbase and MetaMask and allows them to spend their digital tokens while the merchants receive U.S. dollars. The digital payments giant says it will charge a 0.99% transaction fee, decreasing the cost of transactions by up to 90% when compared to international credit card processing. It'll be available to U.S. merchants in the coming weeks. Now, this new feature builds on PayPal's push into digital assets, which includes its U.S. dollar stablecoin dubbed PYUSD and recent partnerships to expand stablecoin use around the world. Next, crypto still has limited Main Street appeal. That's according to a new Gallup poll, which revealed that 14% of adults in the U.S. report owning Bitcoin or other cryptocurrencies, with few others intending to buy it soon. According to the survey, most Americans say they won't ever buy crypto, as their perception of it being a risky investment seems to be a key barrier. However, the report reveals that ownership among U.S. investors has definitely risen over the past few years, which grew from single digits in 2021 to 17% today. Also, crypto ownership is most prevalent among men under 50. Last, a group of Democratic senators are probing the head of the country's housing finance agency on his, quote, risky proposals to allow unconverted crypto assets in mortgage loan underwriting. Now, the 5 senators, including Jeff Merkley, Elizabeth Warren, and ranking member of the Senate Banking Committee, Chris Van Hollen, sent this letter to the Federal Housing Finance Agency Director William Pulte last week. The letter requests information regarding his recent directive to Fannie Mae and Freddie Mac to consider crypto assets in their underwriting guidelines for single-family mortgage loan risk assessment. The senators expressed concern that crypto is more volatile than traditional assets and stressed that Congress and the public should better understand the agency's decision-making process to assess the potential risks and benefits to the order and the implications for the housing market. Now, last month, Pulte said in a post on X that the agency will study the usage of crypto holdings for those looking to qualify for mortgages. We reached out to the Federal Housing Finance Agency for a response to the letter, but didn't hear back right away. All right, for our main story, Crypto World's Tanea McKeel spoke with crypto entrepreneur Joe Lubin. As a co-founder of Ethereum, blockchain company Consensus, and now chair of the crypto treasury company SharpLink Gaming, we asked him about the rise of the corporate crypto treasury trend and when we could see Consensus go public.
SharpLink, the company you chair, is ramping up its efforts to buy ETH as part of a crypto treasury strategy. That's part, of course, of a growing trend on Wall Street now. And I was wondering if you could walk me through why we're seeing this sort of rush of crypto treasury efforts and maybe explain the utility for those of us who are still trying to make sense of all of this.
So from our perspective, Ethereum is poised to become to really establish itself, assert itself as the global financial infrastructure foundation, essentially the global platform for digital assets, for stable coins, for decentralized finance, so the global settlement layer for digital assets. And Ethereum has been preparing for this moment, for this crossing of the chasm into mainstream culture for about 10 years. We've been building layer after layer of enabling infrastructure and protocols and standards. While retail has understood what we were doing at times, and the financial industry has been interacting with our technology and our ecosystem over the years, what we're seeing is the financial industry is really recognizing that Ethereum is the only game in town for decentralized financial infrastructure. It's the only decentralized protocol infrastructure that can handle programmatic money, smart contracts, and that it's been running nonstop for just about 10 years in a row, like 100% uptime. That's the kind of reliability that mission critical applications require. We recently have been adding scalability, horizontal and vertical scalability, affordability, so cheap transactions, cheap block space, usability. The one thing that we've been missing over the last few years is enough applications for end users, for consumers, and for businesses to draw in the users and all the transactions. And so in the United States, we've seen legislation now and the embrace by regulators and legislators of our technology. And so we now have gale force winds in our sails to bring in enterprises and financial institutions to use tokens, use DeFi, issue tokens, and to bring in builders to build really compelling applications. And so we're in this moment now between when all the applications and users arrive and our enabled technology, where we have a ton of block space, but there's actually a lot of ether out there, perhaps too much ether out there. There's lots of ether that will be utilized in the not too distant future. But the opportunity, the understanding that decentralization is going to grow over the years, and that's going to put a massive bid under Ether and under Bitcoin and some other tokens. And so we believe it's pretty much guaranteed that the value of the Ether token is going to continue to grow. And projects like SBET or SharpLink Gaming are well advised to buy as much Ether as we can, as quickly as we can, so that we light a fire under the Ethereum ecosystem and technology, so that we reduce the ratio of Ether to block space, essentially tightening up what have been slack supply-demand dynamics into very tight supply-demand dynamics for Ether.
ETH and SBET obviously having a huge moment. I want to ask about consensus briefly before I get back to the broader picture, public markets and regulatory themes. But consensus just trimmed about 7% of its workforce, and that was after more substantial layoffs last year, when of course ETH was not in the position it is today. A spokesperson said that the latest cuts were part of a push to profitability. Where is the company on those goals now? How close is it to achieving those goals?
Yeah, Consensus is doing incredibly well. We have an incredibly healthy balance sheet, and we are putting MetaMask into a position to transform decentralized finance. So lots to announce on that really soon, and really exciting things to announce for our Linea Layer 2 ecosystem. There will be a token generation event very soon we're going to change the game with respect to layer 2 roll-up technology, and that news is coming very soon.
We've seen lots of successful public debuts for crypto companies this summer, and Consensus is seen as a company that's ready to go public. Are you thinking about that more seriously, given the market reaction to Circle and other peers in the space?
Well, it's certainly an exciting environment to do things publicly. We are doing things publicly with SBET, and we will explore all of our options in the future.
On the regulatory front, Consensus was a target of a regulatory crackdown for crypto during the Biden administration. Things are much different now under Trump. I'm curious how Consensus is engaging with regulators now, if at all, and just, what kinds of conversations you're having around rulemaking.
So the SEC is very progressive and constructive, progressive in an innovation sort of sense. And we have conversations with in different contexts around things like no action letters and safe harbors and things like that. So we're incredibly encouraged at how legislators on both sides of the aisle are embracing our technology. Certainly the Republicans have been tip of the spear on that. And the regulators are doing great things for our industry, recognizing that America is in a world-leading position. America is facing certain challenges, as are many other nation states, and there are issues of debt. And the best way to deal with those issues is to rapidly grow our way out of the debt issues, and blockchain and decentralized protocol technology and DeFi will enable tremendous pace in the growth of the economy.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.